Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's Friday night, December 30th. You made it to the end of the week, and soon to the end of the year. The time is 10 p.m., so let's go. Voyager will shut down the stablecoin Voyager Protocol US dollar. The plan is to give out the remaining treasury to users through a redemption app until June. The Voyager protocol was an algorithmic stablecoin network. In that way, it was similar to the Terra stablecoin. The Voyager team dropped the mint function of their app in May when the Terra stablecoin lost its peg. They did this to protect users in case their stablecoin also stopped being worth what it was supposed to be worth. The Voyager team tried for 6 months to make their app safer, but they were unable to find a way to do so that was also cost-effective. They said, quote, "Upon rigorous research and discussions, the team found no notable breakthrough in the algorithmic stablecoin design that is capital efficient." And so it came to pass that the Voyager team stopped their burn function, and that means that users can't use the normal process to exchange their remaining USDV for its backing. The developers made a redemption portal to give out the remaining treasury. They will keep this redemption available until June. To give out the funds fairly, the Voyager developers broke up the Curve and Uniswap liquidity pools and made a record of how many shares people had. They will use this information to distribute the remaining funds to the holders. It's not clear yet how much money each of the holders will get for each coin. That's because Voyager Protocol USD has been removed from the major price websites. It could be worth $1 or it could be worth less. The Committee on Foreign Investment in the United States plans to review any deals made by the bankrupt cryptocurrency lender Voyager. This review could affect the completion, timing, and terms of the deals. It's expected that the committee will review transactions made by Voyager Digital Holdings, according to a statement made by U.S. Attorney Damian Williams. This review could affect the completion, timing, and terms of any such deals. It's the job of the committee to review purchases of companies with U.S. operations by overseas entities. If they are concerned that the deal would pose a national security risk to the United States, they can block that deal. Now, the filing on Friday did not mention Binance US. That said, the subsidiary of global exchange Binance.com did recently agree to buy Voyager's assets for $1.022 billion. Currently, Binance.com is the largest cryptocurrency exchange. But the way things are going lately, that could change quickly. In September, Binance.com was one of the initial bidders for Voyager's assets, but was not selected. FTX won that bid, but has since collapsed. It has been reported in some circles that Binance's bid for Voyager was rejected at that point due to national security concerns. Binance's founder, CZ, was born in China, but is in fact a Canadian citizen. Binance has described itself as an international company. So if you're here for your fix of FTX news, here we go. First off, it appears the founder of FTX reportedly sold $684,000 worth of cryptocurrency on a Seychelles exchange while on house arrest. It seems Sam Bankman-Fried is reportedly selling large amounts of cryptocurrency soon after being released on bail. According to an on-chain investigation by DeFi educator Bowtied Iguana, SBF has sold $684,000 worth of cryptocurrency so far. On December 29th, Bowtied Iguana reported on Twitter that there may have been a series of suspicious wallet transactions linked to Sam Bankman-Fried. They suggested that Bankman-Fried may have violated the conditions of his release by spending more than $1,000 without permission from the court. According to analysis by Bowtied Iguana, the public address belonging to Sam sent all of its remaining funds to a new address on December 28th. Bowtied Iguana also noted that Bankman-Fried took control of this address from the creator of SushiSwap, Chef Nomi, in August of 2020. Now, reportedly, Within hours of receiving the funds, this new address received transfers totaling $367,000 from 32 addresses identified as belonging to Alameda Research. An additional $322,000 came from other wallets. Bowtied Iguana reported that all of the funds were sent to a centralized cryptocurrency exchange in Seychelles and to a platform called Renbridge. The new address reportedly sent a total of 519.5 Ethereum to yet another address. This address also received funds from addresses identified as belonging to Alameda Research. Bowtied Iguana identified 5 separate transactions of less than 51 Ethereum each that were used to transfer funds to new wallets and then to a Seychelles-based exchange. The wallet linked to Sam Bankman-Fried also sent 3 batches of 200,000 Tether to the fixed float exchange. Bowtied Iguana stated that the Ethereum blockchain, being an immutable public ledger, has permanently recorded this evidence for law enforcement and for the courts to access. They called on attorneys from the United States Securities Exchange Commission to investigate the issue. Even if the transactions are confirmed to be linked to SBF, some industry watchers say that it does not necessarily mean that he has violated the conditions of his bail release. One industry observer suggested that it's not necessarily the same as spending money because the assets already belong to Bankman-Fried. It could be said that he's just moving the money around. Some online commenters speculated that Sam Bankman-Fried himself might be the anonymous co-founder of SushiSwap, Chef Nomi. The head of strategy at Coinbase, Connor Grogan, pointed out that many of the recent transaction links to SBF have connections to early SushiSwap activity. Grogan stated that these wallets, if they all belong to Bankman-Fried, were heavily involved with SushiSwap early on, before Chef Nomi handed the project over to Sam. For his part, Sam claimed in September of 2020 that he was not involved in the creation of SushiSwap. The alleged transactions linked to SBF occurred about a week before he was granted bail with a $250 million bond that he ultimately paid nothing for. Bankman-Fried had previously claimed to only have $100,000 in his bank account after the collapse of FTX. So not only has SBF denied moving funds from Alameda wallets on his Twitter account, he also stated that he does not have access to the funds and is not responsible for their movements. The transfer of funds and the way it was carried out raised suspicions within the cryptocurrency community that it could have been an inside job, and that's why some people suspected that Sam must have been involved. The Alameda wallet was found to be exchanging small amounts of ERC-20s for Ethereum and Tether, which was then sent through instant exchanges and mixers. The government of the Bahamas recently announced that the authorities seized $3.5 billion worth of cryptocurrency from FTX on November 12th. The authorities said that they took this action to prevent the risk of the funds being imminently dissipated. This news follows a warning from Sam Bankman-Fried about cyber attacks on the platform in mid-November. Now, all that said, FTX's bankruptcy may result in billions of dollars being returned to the crypto exchange's creditors. This is according to an insolvency attorney, and by that, they mean clawbacks. Clawback is when money that has been paid out must be returned due to certain circumstances or events. For example, an insolvent company may need to recover funds paid within 90 days before filing for Chapter 11 bankruptcy. If that creditor is an insider, the clawback period is extended to 1 year. What that means is that the collapse of FTX Group may have further consequences for businesses and investors. They may be required to return billions of dollars paid to the crypto exchange in the months before its collapse. This is due to clawback provisions. Because creditors may seek to recover money transferred by FTX to external parties through a clawback. This could include $2.1 billion paid by FTX to Binance when Binance exited its Series A investment in FTX. Binance's CEO has said that Binance's lawyers will handle any potential clawback of that money. If a clawback is necessary to recover funds for creditors, the bankruptcy court may require the return of either the crypto assets themselves or the equivalent value in money. And this is really important. This is according to the bankruptcy attorney Mark Pfeiffer. Pfeiffer is a member of the Blockchain and Crypto Assets Practice Group at the law firm Buchanan, Ingersoll & Rooney. According to Pfeiffer, if the court decides to require the return of the equivalent value in money, it is not clear when that value will be determined. The court may consider the value at the time of the transfer, the time of the bankruptcy or lawsuit filing, or the time when the judgment was entered. As a result, the asset's value may be different depending on which time frame is used. Pfeiffer warned that customers who liquidate their crypto for cash may be required to return crypto later. This could result in a loss if the value of crypto increases. On the other hand, customers who hold on to their crypto risk being required to return cash even if the crypto has not been liquidated for the amount of the judgment. Either way, customers may face additional problems if they make the wrong decision. During the bankruptcy proceeding, many other businesses may be required to return money. This includes Silvergate Bank. FTX customers have filed a lawsuit claiming that the bank aided FTX in fraudulent activities through improper transfers of funds. So, there are three main types of clawback. The first type allows a debtor or a trustee to recover property transferred to a creditor within 90 days before the bankruptcy while the debtor was insolvent. Pfeiffer stated that there are defenses to a claim of preference. The most common defense is if the transfer was made in the ordinary course of business. However, Pfeiffer noted that there is a question of whether a de facto run on the bank would be considered within the ordinary course. Now, the second kind of clawback, you have the recovery of property transferred fraudulently by the debtor while the debtor was insolvent and with the intent to defraud creditors. Pfeiffer noted that while there may be fraud involved in the FTX case, it may not have been done with the intent to defraud creditors. That intent may have been unrelated to creditors and instead solely for the enrichment of the principals. The third type of clawback allows for the recovery of property transferred by the debtor while the debtor was insolvent and for which the debtor received less than reasonably equivalent value. So you can't go into bankruptcy and sell all your equipment to your buddy for cheap before the bankruptcy happens. FTX's bankruptcy case may involve fraud and mismanagement like other bankruptcy cases, but it may also establish precedents for how crypto assets are dealt with in bankruptcy courts. Although other regulators and courts may not follow the rules established by bankruptcy courts, similar questions about the classification of crypto assets are likely to arise. Pfeiffer stated that these questions, such as whether crypto is a currency, security, commodity, or something else, may also come up in contexts outside of bankruptcy, such as securities regulation and general litigation. In related news, SBF reportedly met with senior advisors to President Biden at least 4 times in the 2 months prior to the collapse of FTX. The former CEO had multiple meetings with government officials at the White House in 2022. One of these meetings reportedly happened within 2 months before the fall of the crypto empire. Visitor logs from the White House show that Sam had multiple meetings with government officials in 2022. These meetings were with the counselor to the president, Steve Ricchetti, on April 22nd and May 12th, and policy advisor Charlotte Budash on May 13th. The logs are published by the White House on a monthly basis. According to a report from Bloomberg, on December 29th, SBF had a meeting with Ricchetti on September 8th. This meeting did not appear on the White House visitor logs. And you can imagine the fact that Sam has had multiple meetings with government officials at the White House. That's raised questions among members of the crypto community. They're curious to know why there were so many visits between FTX and the White House. According to a Bloomberg report, sources say that politics was not discussed at the meeting. Instead, the conversation reportedly focused on the crypto industry, exchanges, and pandemic prevention. SBF is reported to have frequently visited Washington, D.C. in order to influence crypto policy and to make connections. Bankman-Fried has previously been accused of trying to redirect regulators away from centralized exchanges like FTX to decentralized finance platforms such as MakerDAO. Sam made significant donations to the Democrats. In an interview with a crypto vlogger on November 16th, he admitted to making donations to the Republicans, but stated that these donations were dark. Now, one question I have is what's going on with these donations? And we were just talking about clawbacks. How many political donations are going to actually be clawed back? And how much is just going to be forgotten about, left to fill some politician's wallet? I mean, look at the donations to the Republicans. Do we even know all of the donations that he made, considering he made them in other people's names? These are all questions that need to be answered in the coming months. And that's going to do it for us tonight. I want to thank you, my listener, because when you stop listening, I will stop talking. We'll see you tomorrow night.